Hey everyone, and welcome back to another video on the channel. This is the first ever video for the Mini Options Portfolio, which is currently sitting at $510.88. For the day, we're up $13 or 2.61%. For the week, which is basically the all-time, we are up $10.88 or 2.18% on the account. This is the first ever update video on this new portfolio, which I started on Monday. I deposited the $500 into this account on Monday, if you saw that introductory video on the idea, and I placed my first trade, it looks like around 11 a.m. on Tuesday, and I've since just been holding that single trade, and we are currently up about a little over 2%, or about 11 bucks on this $500 account, which is pretty cool. So yeah, today I'm just literally going to cover everything about this trade, what led me to take this trade, how this trade works, and how I plan to take it from here, I guess. What are my exit plans? What are my scenarios that I'm looking at? So I'm basically just going to cover all of that on this play today, but we're already off to a pretty good start. This is a longer term play though, so these short term gains really do not matter, and we're not going to make any actions or maneuvers based on this, but yeah, so let's get straight into it. So the first play in the account is a 540, 543 call debit spread on SPY, which is an S&P 500 ETF. So the first play is a spread play, and once again, it is a call debit spread. It is pretty far in the money, about $21 in the money on the long leg, and about 18 on the short leg. And it's a $300 wide spread. I originally entered this spread for $265 per share on the contract, so $265 is what I paid. It is currently valued at $276, so that's where that plus 11 comes from. But yeah, and like I said, this is a $300 wide spread. The max profit from the opening price is $35. We've currently made 11 of that, which is really solid. And yeah, so let's talk about the reasons for entering this position. First of all, just to kick it off. So basically, I was reading on CNBC when I was at work on Tuesday, and because I was looking for the first trade I wanted to make, and I didn't want to just catapult myself into something just for no reason, just to have a trade. I did want to wait for some sort of opportunity, and I was reading up on CNBC. I was reading the news, and I'm not sure if I'll be able to find the article on here, even though it was on CNBC, but essentially Jerome Powell testified in front of Congress talking about the market and the economy on Tuesday. I believe it was Tuesday morning, around a little bit before I placed that trade, and I basically read up on the news article on his talk and pretty much everything that's covered. I also looked into the CPI inflation data as well as the current employment data and where we're at with that, and also what Jerome Powell actually said at this meeting as an indicator of, when will the Fed cut rates, things like that, because yeah, just basically cutting rates makes it easier to borrow money at a lower rate, which essentially bolsters economic growth because businesses can borrow money at a lower rate of interest, and that makes essentially growth and investment into the U.S. economy a lot easier, which in turn generates a lot more money and overall just brings the market up. So the market is looking for these rate cuts, and I believe he hinted at the potential for, or the likelihood that they would cut rates one time this year. I think September was thrown in there. That might have been the time when they're thinking about it at the next Fed meeting. So basically good news. I also read up that inflation is headed down. The CPI data, it looks strong. It's headed down towards their 2% target. And as for unemployment, I believe we did have some stronger unemployment news this week, or by stronger, I mean the job market seemed to be doing well, which is not in line with what the market wants, but I think the overall trend is towards more unemployment, which is a sign that the rate hikes are working. Same with the inflation dropping, so there's a trade-off between inflation and unemployment. That's something you learn in economics, and essentially by increasing rates, they're hoping to decrease inflation, while in turn a side effect of that is increasing unemployment. And so we're starting to see, or not starting, but we're really seeing those effects taking place in the way that the Fed wants it to happen, which can kind of signal to them that it may be time to begin to cut rates, which is what the market wants to see, obviously. So when they heard that news, they really liked it. Once again, that was on Tuesday. Let's see. What day would that be? The 6th? Yeah. Oh wait, no. Sorry, the 9th. Jeez. Yeah, so on the 9th, so once again, I opened this play around 11 a.m. Market really didn't, I mean, it went up a little bit, didn't budge too much, and then today on Wednesday, which is when I plan to be making these videos, had a pretty good rally, which was really nice. I'm not really sure what sparked this in particular. Um, Looks like we do have a inflation report on Thursday, which will, I guess, confirm or deny my suspicion or my bias in the market. But regardless, I saw this news and I opted for a call debit spread that expires towards the end of the month, 8/2 expiration, so early August. And yeah, so essentially what this play is it's an in the money call debit spread that will essentially have to reach a spread price of $3 per spread come expiration if it's still in the money, which means that I would have entered for 265 per spread and I could exit for 3 per spread, a little bit less obviously, but that's the idea. Um, I opted for a debit spread. Originally, I was looking at a put credit spread. I ended up changing that up. I ended up opting for a debit spread as opposed to a credit spread because the VIX is on the lower side right now. So the VIX is a measure of volatility, specifically in the S&P. So that's why it kind of lines up with Trading SPY. But let's see. So with the VIX on Tuesday, it was. I mean, it's on the lower side just in general at 12.5. We've seen it much higher. In recent history during like 2022 is very elevated, and we had a little bit more of that last year as well, but for the most part you can see it's kind of bottomed out around 12 pretty consistently, like low 12 high 11. So I originally opted for that put credit spread, but I kind of realized that by doing a credit spread, volatility would not be in my favor because when you're selling options, if volatility increases you are losing money due to Vega. So the Vega on the contracts, which essentially is a measure of how much the contract price will change for every dollar change in the underlying. And for selling options, your Vega is, or sorry, geez, not, I'm thinking of Delta. Sorry about that. Vega is a measure of the change in the contract price per, you know, I want to say 100% change in implied volatility, but I could be wrong on that. I'm not sure exactly on the definition of that, but I just know that for Vega, it's a measurement of the change in volatility and how that affects the options contract price. So by selling an option, I would in turn have Vega against me. Typically, you want to do that in a higher volatility environment, hoping that the volatility will come back down. But like I said, since we're in a currently a pretty low volatility environment, instead of doing a put credit spread, I opted for an in the money call debit spread. That way, I could not only get theta in my favor, like I was doing by selling a put credit spread, but on top of having theta in my favor, which is the amount that the spread will decrease in price or increase in price per day that the contract is open. So I opted for the call debit spread as a way of essentially having Vega and theta in my favor. That way, if volatility increases away from or back towards the mean, then we will make money, and also with the passage of time we'll also make money. So it puts more Greeks in my favor essentially. And on top of all that, once again, I have a positive bias towards the market as of right now because of that Fed news on Tuesday. So all of that combined, I ended up opening this call debit spread, which is so far performing pretty well. As you can see, up about 4.5%, which on the overall portfolio is a little over 2%, which is pretty nice. So it's a good first trade to make. It's kind of dipping in a little bit just to get started. My theta on this particular set of contracts here is, let's take a look here, 16.5, and I believe this one's 17. Oh, 16. Yeah, that would actually make sense. So every day that we have this set of contracts open, we are making 50 cents. So every single day that I have this spread open, the price of the spread is going to increase by 50 cents as long as it stays in the money where it's at. So that's that theta working for us. Once again, the Vega is also working for us, and you can see that the volatility did actually go up today. So that also worked in our favor, on top of the fact that the S&P 500 went up by 1%, which also helped us because we have a call debit spread, so we have a positive delta. So all in all, 3 Greeks worked in our favor today, which is really nice to see, and I set myself up to have at least 2 Greeks working for me no matter what the market did. And on top of that, with my forward or my bullish bias, that's why I had delta working for me with the call debit spread. But yeah, let's talk about scenarios here. What I'm hoping to do, I'm really hoping for the best possible outcome would be for me to be able to close at 50% profit on the remaining credit. So I open for 265. The contract can in theory, or the contracts can in theory go to 3 as a total spread difference. So I'm hoping to essentially capture 50% of the difference between 3 and my opening price. So essentially halfway between $35. So about 17 and a half dollars of profit is where I'm hoping to close this out early for a nice 50% profit. Currently we're at 11, so $6 more if that were to happen tomorrow, or it might take a couple weeks for theta to give us some value, but I'm hoping to close at essentially what is called P50s, which is 50% profit. So I can close out early and not have to deal with gamma risk or things like that. So yeah, that's my best possible case scenario. My worst case scenario, I'm hoping to likely close out at 100% loss of the credit that I'm looking to get. So, and it's a little bit weird because it's not a credit spread, so it's kind of hard to explain it with that terminology. I'm used to credit spreads. For the debit spread, essentially if I go into the negative by $35, so the spread would have to lose $46 of value from its current price, then I would end up closing this out at a loss of 100% of the original potential credit, if that makes sense. It's a little bit weird to talk about when you have a call debit spread as opposed to a credit spread. We're not actually opening for a credit, but there is a credit possibility there of $35. So if we go negative by $35 on the total return, then I will be closing this out for a loss. So that's essentially the position we're in right now. So either closing early for a profit at P50, 50%, which would be a $17.50 gain, or we're closing early for a loss of $35. So either around 18 bucks in gains or 35 bucks in losses. As you can see, obviously we are currently on the positive side of that, which is great to see. And yeah, so yeah, sorry if this video is a little bit all over the place. I really got to kind of figure out my style for this type of video because I'm not used to talking about options. Obviously, it's been a while, and on top of that, this is a whole new portfolio, so I don't really have like a flow that I can go through that I'm used to. So if this video is a little bit all over the place, I apologize for that, and we'll just work on that as time goes on with future videos, and then I'll get used to it. We'll have a nice little flow to it. But yeah, one last thing is if you're not currently subscribed and you're watching this video, which is quite a lot of you, almost 90%, which is a lot. If you're watching this video right now and you aren't subscribed to the channel, please consider subscribing. I do 2 weekly portfolio update videos now, one on the small options channel and a second video on the big SPY portfolio. So I'm going to be doing 2 weekly portfolio update videos now. So please consider subscribing to the channel. And yeah, with that being said, I think that just about wraps up our first ever mini options portfolio update. Off to a great start here. And we'll see how it continues next week, so make sure to tune in next Wednesday to see how this goes. Especially with that big inflation report coming out tomorrow, this could really shake up the play in either a good way or a really bad way. So I guess we'll have to see. But yeah, thank you for watching this video, and I'll see you in the next one. Goodbye.